more. I want to bring in Rosecliff Capital founder and CEO Mike Murphy, who is back with us from our New York studio. Also with us is McClellan Markets Report editor Tom McClellan. Tom, let me kick this off with you. You've studied various terrorist attacks in the past, and you have noted that while sometimes we see a short-term negative reaction, that is exactly what it is, just short-term. What are you seeing?
Well, the natural tendency for all of us is to remember the 9/11 attacks and remember the awful market decline that unfolded once the market reopened after that. But that was a whole couple of orders of magnitude bigger than the other kinds of attacks we've been seeing around the world ever since then. 2005, the subway bombing in London, the Boston Marathon attacks, the Charlie Hebdo attacks. What we typically see is everybody thinks that the market's going to crash because there's war and there's attacks and there's killing, but the market's typically up the next day. I don't know exactly why, but that's the tendency. And we saw it last night when the futures opened down 10 on the S&P 500, and now they're up slightly. It's following the same pattern.
Yeah, and Mike Murphy, typically what you see is markets are reacting to fundamentals, and that is earnings or economic growth. I mean, you saw that overnight in Japan when we got the GDP out last night, which basically showed the Japanese economy contracting again, and as a result, the Nikkei average was down overnight. So markets tend to react to fundamentals like earnings and economic standings as instead of massive stories like this fatal terrorist attack.
Exactly, Maria. And what you're seeing, look at last week. We had the energy complex was down 6% here in the U.S. and retailers were down almost 10% for just last week. So now this week coming up, we're going to hear from Walmart. We're going to hear from Home Depot. We're going to hear from Target. So I think a lot of the focus is going to be on the upcoming earnings reports and also on the fact that on energy being down 6%. Now you have oil up over 2% this morning. So you're seeing a lot of focus. I want to watch the energy names after last week's rout, and I want to watch the retailers after last week's rout. We'll get a good read on the U.S. consumer this week from some of the companies reporting.
Yeah, I think you make a great point, Mike, because oil prices, of course, have been really one of the major movers within markets, global markets, in the past couple of months. Oil prices have plummeted back down to around 41, and today we're seeing a rise of about 2%. Tom, then there's the Federal Reserve. Let's talk about that for a moment, because whether or not the Fed sees this terrorist attack as some kind of a dictator or an impetus to either move or not move in terms of raising interest rates. We got a very strong jobs report in October, and yet a lot of people thought that the Fed would raise rates in December. Perhaps. Does that still stand, given what we are seeing here in Paris?
Well, keeping interest rates at zero hasn't accomplished what the Fed wanted it to accomplish. So that's probably time to end what was a bad idea to begin with. It's just picking the right time to start doing the right thing is a difficult thing for the Fed. I think even more important for the economy and for the recession than whatever the Fed does is what the federal government's been doing with taxes. We have tax receipts for the federal government now up to 18% of GDP. Whenever you get to 18% or higher, we always end up in a recession every time. And so we shouldn't expect to see anything different this time. We're already seeing Japan in recession, seeing China slowing down. We already know from lumber prices falling that that has bad implications for economic growth and for employment in the U.S. It's just we got to wait for the lag time to go by. If you want a reason to sell, don't sell on terrorism. Sell on the bad prospects for a stock market going into a second-term election year.
Yeah, and of course the decisions going into that election year may very well be dictated by incidents like this one. Mike Murphy and Tom McClellan, thank you very much for joining us.